All right, Guten Morgen. I'm starting off late. It's 10:20 because I had an appointment this morning and what can I do? I had to take care of that. Um, just a little slap and reminder of all the profits I left on the table. Left on the table. I didn't even put myself on the table. I didn't even bother to take the trade. And then after switching to a further out strike and taking, should have gone long there, whatever. If you saw my video yesterday, you know how I screwed up yesterday. This was a trend day and a bounce day. And guess what? I didn't take this short when I should have. When I said, hey, I'm going to wait for it to pull back to VWAP and then take it short, I didn't do it. I thought about risking a late entry short here on this last final push. Didn't do it. The thought to myself that there's a very good likelihood that we may end up bouncing at this trend here, complement with the fact that this is an important level, and on Thinkorswim, we formed a very clean 15 and 30-minute demand. I went long, but I put a tight a tight stop loss. And so since I'm late coming from work, I already have like 5 products I got to do, so I got to make this quick. Well, actually, what I wanted to do was to take a swing. I wanted to take a swing in the hopes that we might recover pretty strong overnight. I don't know if a swing would have worked, but I looked at the options for the next day and they were very expensive. I think the 410 strike was like $200. But let's see what happens if I chose the 413. Yeah, they were all very expensive, but I forgot what I chose, but it was on the day of expiration option. But any swing would have worked fairly well if you had gotten in down here. Let's try a 414. Yeah, I probably could have I don't know if I would have had enough money to be honest after that first trade I took. Nope, because that was the only trade I took yesterday. So I would have had more than enough to get in here, any position here, and taken this as a swing. But I didn't. So anyways, let's talk about today. Adam Mancini tweeted many times. And you know what? Honestly, I haven't thoroughly read his newsletter, so I'm not really prepared for today. And I'm just after yesterday, I probably should just not trade today at all. I'm beyond frustrated. But putting it on ES and to zoom out. This was a trend line I thought we would bounce at yesterday, and we did. This is the head and shoulder pattern that I should have thought of, I did think of, but I should have acted on, and I didn't. Let me just read Adam Mancini's tweet. I'm just, again, beyond frustrated since yesterday. And I had to wake up earlier than I really should have because this roommate decided to start talking on the phone at like 7 in the morning, and then she just got louder and louder and louder, so I decided just to get up earlier than I needed to. Not that I was asleep anyways, just I can't sleep with all the light shining in the morning. All right, Adam Mancini tweeted, after yesterday's dip buy for the 5th 100-point dip in 2 months, my target was 4144 and ES now basing here for 15 hours. Sorry, and I know my body's fighting some sickness as well. I feel like I'm constantly fighting an illness ever since she moved in. Holding pattern until FOMC 2 p.m. Targets remain 4155, which is like just a stone throw above. I mean, it's right there. Then 4166 to 75, which again, it's right there. So I don't know. Let's take a look at the VIX. Massive sell-off yesterday. It looked like we rejected off of this line and this trend, which was the channel that we were stuck in for a while. If I zoom back to a 1030, assuming this, yeah, This channel we were stuck in for a while. We broke out, fell back in, broke out, went all right through it in that last week's rally. And then now we're back up again. So I don't know. Is it possible we may break down to this daily? Maybe, but we could just as easily, I guess, drop down back to this channel. So nothing telling there. I see no patterns that I can discern. So yeah, I don't know. I'm just beyond frustrated that I didn't. If I had taken those two trades yesterday, if I had followed my instincts, followed my gut, taken this short and held it to the end, then taken this long, and I could have maybe even used some of my profits to take a swing, these 2 days would have been the best two trading days since one of my trades I took in 2021, which was a $600 trade. Um, Otherwise, this is just crap. So I'm just gonna watch until 2 p.m. and see what happens. It looks like, for now, a supply has formed. Let's see if it's cleaner on ES. Yeah, it's very clean on ES. Clean supply here. Is it on a 30 as well, I wonder? I gotta check it here. Yeah. So it's a very strong supply. Let's go back to a 515. I switch back to SPY. I'll try and put it on SPY as well, but it's not as clean on SPY. However, we did form a demand here. So there's that. That demand is about 4140. Now here, if I was home, come on man, focus. No sleep and hungry. If I was home, this is demand, here's our retest, take this long. And we'll target, well, I bet you that's really expensive, 412. Let me zoom out a little bit. Damn it, I wish I can take some of these options off the drop-down menu. Take off this auto arrange crap. All right. Oh yeah, that's why I zoomed out. I want to see. Yeah, 413. This is the strike I'm gonna have. God bless it, man. This is the strike I would have to use, and I would have just enough money to maybe get in. But this would have been like a $50 profit, $40 profit right here, and I would be happy calling a day right there. Anyways, I don't know. I don't have any plans. I don't know what plans to come up with. I probably should even bother trading today. This is just going to be a crazy day, no doubt. But now that I've said that it is, it probably won't be. It'll probably be a very straightforward day. It'll drop down exact to a support that Adam Mancini gave and rally to another spot, maybe. I don't know. Right now, it looks like this supply zone has been tested again. It's rejecting off this trend and it's dropping. So let's see what happens at this demand. But I have a crap ton of work to do, so I gotta focus on that now. I gotta double check. I thought I was recording and I was here yakking away. I don't think I hit the record button. Unless I actually turned it off, I don't know. But I was saying how hypothetically, if we had gotten in this short here, I had chosen the 411 strike, but it's too expensive. So I had to choose the 409 strike, and hypothetically we would have gotten in here at the retest. A good spot to get in would have been the rejection of this trend line, and I think that is going to be here. So we could have gotten in here at 80 and then sold. Well, we could have sold at the demand, but it blew right past this demand. In fact, the good spot to sell would be the support, which is 4132, which I just had to adjust. This one was actually 4138, and I had it up here, so I had to bring it down here and readjust because I don't know how my my level could be so far off, but clearly it was. And here, look, I have 4142. Clearly that's not 4142 at all. See, look how all of my levels are wrong again. This can't be a coincidence. There's something going on here, man. This is actually more like 4138. Just ridiculous. Okay, so we're en route to forming a demand with a fake breakdown of this trend, which is bullish, I think. So, anyways, I really shouldn't trade until after 2 o'clock, though, to be honest. And I really should step away for a bit. Which, yeah, I think I'm going to do that. All right, tweet from Adam Mancini. And it looks like we've lost four. Have we lost it? Oh, we're still at 4132. Okay, pre-FOMC ping pong between the levels underway in ES as market sets up. 4155 was first target today with 4132 support. Yep, we got to exactly assuming that this is right. Yeah, at least this is right. This is 4155. 4155 sold to 4132. Meaning if you took this short, this would have been a perfect short to set up for the day right here. Or if you just want to do Adam Mancini's levels and you decide to take 4155 short and put an short entry here, this would have been even better, I think. Let's experiment with that. This candle started at 9:45. So yeah, I think this candle will obviously close at 10 o'clock. So then where it had to be here. This had to be it. If I go down to the minutes, this would be it. $70. So if you decided to go in on a ODTE 409 put, another project, a 409 put, and you're able to get in at 70, or whatever, 75, and you held it up until now. If 4132 fails and this drops, there you go. You've got $100 per option. So if you're able to get in at 7,500, I mean, why would you even hold the whole thing? You would sell some of it by now at 4132, probably 80% of it, and just lock in your profits and let the rest run. But this is a good put right here. It's pretty clear cut. Anyways. All right. Bulls have done a good job of keeping it above 4132, and in doing so, we've formed a 30-minute supply and a sloppy looking 15-minute supply, which has already been retested, unfortunately. But I'm trying to tell myself not to take the trade until after 2 p.m., but there's been times where I'm going to shoot for 414. No, let's shoot for 415. There's been times where price chopped above a level, and then at the FOMC meeting, it may spike up, drop back down near or just below the level for a fake breakdown and spike up again. Or it may spike down, so I don't know. Generally speaking, my preference on FOMC days is to trade before 2 p.m., make a little bit of profit, and then walk away and be done with it, and not avoid the whole volatility. But as time goes on, it's becoming less and less volatile. Excuse me, I'm pretty straightforward. But unfortunately, I didn't see this, so if I wanted to trade this demand zone, I should have gotten in already at perhaps 55. Now, how high this goes, I don't know, because bears have been doing a pretty good job keeping this push down just above the level. A quick check of VIX shows that we have a daily now that we have to get through. How effective is that daily so far? I don't know. It doesn't seem to be really. It had no effect really yesterday, except for maybe this is a fake breakout. I don't know. But if we can push beyond this and the next daily, then yeah. But again, seasonality, if I recall, we should be beginning the bearish month, although I didn't see anything mentioning about seasonality, but let's take another look. Oh, it was right there. Oh, well, I guess I'm wrong. I guess we have one final spike in the first week of May, and we don't really start seeing the bearishness until maybe the second or third week of May. And towards the end, it gets pretty bearish. So I guess, yeah, I guess we could be having a pop today. Look, it's VIX is dropping, so this is pushing up. I guess I wish I noticed this. All right, so we're gonna put a alert. I know I should stop doing alerts, just put a buy in, but at 55, see if it pulls back down again later. Maybe we'll try it and hold it up until the FOMC meeting. Maybe it'll spike up and we can do a market exit, or just if we can do a very good calculated buy limit sell and then get out of the position for a quick profit. That would be great. But unfortunately, what pisses me off now is I've lost $25 between yesterday's trade and the day before. Also on a 30 minute, let me just show you what it looks like on 30. This could be a head and shoulders on a 30. Well, anyways, I'm just going to wait and see what happens. I don't think this is going to come back and retest, to be honest. But we still have quite a ways till 2 p.m. Well, this demand zone played out pretty nice. Unfortunately, the strike I have to use is just too far out of the money. What you would want to use is a strike that's at the money or in the money. In this case, you would want to use 411 or 410. If we choose, oh my God, dude, I'm sorry. I'm so out of it. Let's try this again. I've been making multiple mistakes today. The lack of sleep is really starting to kill me. Okay, what did I say? 411. Okay, let's say we choose the 411 and we decided to get in at the retest here at 11:30. So that would be somewhere here. So let's say we got in at 195. Well, this got up to 210. Doesn't seem like much, but if you did $1,195 and sold at $2,100, you would have made a whopping 300 bucks. Granted, it's not a lot, but it's a scalping strategy. So put it another way. Let's put it another way. Let's say you got in at 1,000. No, let's say you got in at $19,500 because you are just a big game roller. You just got money in the bank like that, and you decide to sell at 205 or 206 so you can pay the commission. You've just made $1,000 off of $19,000, which doesn't sound like much, granted, but it worked. And it may push even higher if you wanted to sell 80% of it and keep some of it. So how high it would push, I don't know. I would guess at least a VWAP, but the volume is slow, the reaction is slow, and follow-throughs are pretty slow because it's pre-FOMC. So, and that's also why these options are so expensive, because of the volatility premium. I think that's the right term. I don't know if I'm using it correctly. So, like I said, look at this. We got to VWAP and pushed beyond. So if I had gotten in this option here back at 56 or something like that, I could have made at least 10 bucks on that push. but because it's the option's so far out, it's only 10 bucks. Now, if we go back to our 411 example, remember I said it got as high as 210. Now we're up to 220. So let's use the same hypothetical again. You got in at 195. You got in for 100 options. So $1,950. And it's about to hit 225 right now, and you sell there. Now, there, you've made $300. But if you use my other example with the $19,500 example, and you sold at preferably right now to what 2.26, you would be able to pay off your commission, and that would have been $3,000. So $19,500 investment to make $3,000. Unfortunately, I can't afford any of these, so that's why I used. That's a pretty hefty fee. Oh my god, dude. Sorry, something else with work. So yeah, unfortunately, the only one I could afford was the 415. Could I have afforded the 414? You know what? That's not true. That's not true. I could have done the 414. It would have taken my entire account. But if I had gotten in earlier, using my entire account, let's say at 80, I guess I could have sold at 95 to make 15 bucks. I don't know. I just don't think it's worthy to use my entire account to make just 15 bucks or 10 bucks. But I say that now, I would rather do that than use some of my account and lose 5 bucks, 10 bucks like the last two trades I've done. I'm still blown away how I was at 115, then I take a trade on Monday and lose, I think it was like $12 or something like that. And then on Tuesday I lost $7, 8 if you count the commission. But somehow my account's down 25 bucks. So, I don't know. All right, let me try calling this office again. Oops, wrong one. Sorry, guys. All right, I wanted to show this, but I was so busy trying to submit something online that I don't know if I got a chance to do it before it. No, it hasn't hit it yet. So here's our level, 4133, 4132, whatever. We formed a clean demand. This is 15, but on the 30, switch real quick, you can see it was sort of tested already, so there's no retest here. You just want to get in as quickly as you can, but I think we may reject here. The next target is 4144, that's the next level, then 4155, 54, whatever. But I have a feeling we're going to reject off of this trend here, which we rejected off of yesterday. But I think we'll push through further on here, but still, this is a good indication of where you would want to sell if you were long. And you can see that 415 strike that I was looking at before peaked at about 67. So if I had gotten in down here at 50, 55, 57, when we got our retest, this is the 1130 candle, right? So that was our retest candle. 11, yeah, so here we could have got in. Obviously, it never went to 55 because I have my alert there, so it went to 56. So even if I put a buy in, I wouldn't have gotten filled. I would have been left behind. But assuming I got in at 56, one could have sold here at 66. But again, $10, nothing massive, but you get what you can get, I guess. All right. Okay. I probably should try and figure out how that line shows on my Thinkorswim because I don't have it on Thinkorswim, this trend. In fact, I believe this is the main, hold on, let's back up to a 4-hour. Yeah, this is the main channel that we've been in for much of April. And the rejection of this channel led to a minor sell. Still, I would have thought we would have made to the top of that channel before our big sell. Look, there's a 4 hour supply right here. Before this big sell here. You know what? I wish I had noticed this. Look at this. Just hold on. 4 hour supply is created. We drop, we bear flag, and we had this big sell yesterday. Mind blown. How did I not see that? But anyways, what's interesting though, this usually doesn't happen on TradingView, but it's happening now. Let's go back to a 15. And a 15, you see we rejected from that green. You know what? I'm gonna make it larger because this is just, what is this, a 2? It's a 3. It's a 3, so I wonder why. Is it the same one? This is the same one, right? Yeah. This is annoying. It still looks just as skinny as any other line. There's like no real difference. That's what kind of annoying. If I should switch to a 4, then it's significantly different, but 3, 2, yeah, it's not really that much different. Anyways, so on a 15, it's a clear rejection right then and there. On a 30, on a 1 hour, on a 4 hour though, it looks like we popped above. So this is disappointing. But it does look like we're creating a supply here. Yeah, I just realized that too. We're creating a clean supply right at 4149.75. Bulls don't want to close this 4 hour at this spot. So it's also a precarious spot because we have this trend line here and this one. Which one is this one? Hold on, let me get that off the screen. Reset view. Okay, yeah. How many rejections have we had off of that one? Not much. But this is where we created our head and shoulders here before this sell-off. Alright, let's go back to a 15. The bulls are recovering though. I think they're going to get this above. So I don't think that's going to be a worry, that 4 hour. But now that I say that, watch, it will be. Watch, we have a hard sell today after FOMC. And I wonder if this is one of those days where I should do a strangle. Remember I said that before? Where I basically try and determine where this would go if it rallies. So we'll do an option like right here. We'll do a 415. So here I could have entered at 55, right? And just hold on to that. Well, I would have rather have entered earlier at 50 or something like that. So but that only happened because we just dropped below 4132 and tested 4130. But see here, I could have gotten in at 56 when we had this little pullback here from that rejection of the trend that just showed on TradingView, and hold on to that up until and beyond the FOMC meeting, and have that here and have a sell. Let's say at our next target is supposed to be 4155. Why don't I have 4155 on here? Oh, I do. I have it here, but is it right? I think it is. Yeah, it is right. We'll have like a sell limit right about here, right below 4155. So this might be worth, if it gets up to that point, maybe 80 bucks. I don't know. Then at the same time, we'll buy a put, and we'll have the put at like 409 or something like that. So we'll buy a, well, damn, look how expensive this is. We'll buy a 409 put, and probably would have wanted to get into that put earlier today when we went up to 4155. But you can have a buy limit on the 415 put. So if the call goes up, it'll automatically sell if we go up, and we'll buy. Unfortunately though, if when FOMC kicks in, this drops and we're not already in the put, then we'll lose money on our call. Does that make sense? So let's say we were already in and we got in at 75, which really you would want to sell by now because of this nice little sell-off. But that's basically how the strangle works. So let's say we didn't sell. Let's say we had more than one option. We sold one, made profits, and we held on to the other in case we do have another drop. So I like the idea of doing strangles on FOMC because of those fake outs. But there have been days where it didn't fake out. It just popped in one direction. Okay, look, bulls are turning it around. So yeah, they're doing their job. So let's go back to our call of 415. So look at that. Right here, if I had gotten in at 56, I don't know how low this, it must have gotten 56. My alert, it just won't go to 55. But if I had gotten here at 56, right there, could have gotten 10 bucks. Anyways, I'm really hoping I can play it smart today and recover back to at least 115 where I was on Monday. 90 minutes. You know what? I should probably get something to eat, man. I haven't eaten anything all day. I still haven't sat down to eat yet, but remember our little retest here around 56? And I had said that bulls will want to turn this around so we don't form a hour or 4 hour supply. Well, they've turned it around. We're back up to this trend line here, which we're probably going to break through any moment. But we peaked almost, looks like at 74. And 4148. That's where we are right now. We're at 4148. Which I'm going to, what is this trend line again? I don't remember. Oh, that's, what, is this the megaphone? No, it can't be. What is this trend line again? Oh, yeah, this goes way back, I think. Okay, anyways, just not focused right now. So yeah, this would have been a good little short. If we could have gotten in at 55 back here and held until 75, this would have been decent right here. What else? Let's take a look at VIX. Oh, I'm sorry, guys. Let's switch this back and go VIX here. Okay. Yeah. VIX had a little pullback here, but didn't even make it to the hour and it's back down. I suspect we might make it to this daily today if we can push back up again to 455 for the day. Really curious to see what happens with FOMC, but I am not too. Oh my god, I got more stuff to do. You know what? This is my lunch break, so I'm just gonna take a break. I got a break and eat. Um. Oh, look here on EA. Remember this trend that we rejected from? Turned it right around, and let's look and see. 4 hour supply is still a risk, but if the bulls can keep pushing this up, this is no longer going to be an issue. But this right here, I wish I had seen this. 4 hour supply was formed. Bull flag, bear flag, I mean, technically a retest of the 4 hour supply. I don't know what kind of zone you want to give for a 4 hour supply. I would think more than just 10 cents. The retest occurred at 4191.75. Supply was formed at 4200.75. So 4200 minus 4191. Yeah, nine. I think so. Yeah, it would make sense to give a $10 zone, I would think, but I don't know. But yeah, and then again on the 15, it looked to me like a kind of a head and shoulders here, with the neckline being here. But anyways, enough of that. I'll be back around. Well, we still have an hour, so we'll see what happens. All right, just managed to finish some stuff right before 2 p.m. Close a bunch of these windows. All right, so looks like I was right. Should have gotten in down here, but the strike would have been too far out. Once again, we came back down here to 56, and it looks like we got as high as 80. We dipped back down again to the low 60s. And here we are at 2 p.m. Here comes the volatility. And look at that. Wow. I wonder if I should have put a buy-in at 50. Nope. Too late now. Look at it skyrocketing above. If I had put a buy-in at 50, although you know what? Even my alert didn't get set off. Is this going to be the initial first fake move from 56 to 105? I don't think I've ever actually watched VIX during one of these sessions. Once again, pushing back down to almost 56, 60. Disney earnings just came in, I guess. Damn, I'm starting to think I should have put a buy-in at 50, 60 something here. And seeing if the algos will push it up high enough for me to sell. Just to at least make 20, 30 bucks for the day. I still find it amazing how this didn't get set off, even though we dipped down to that level. I wonder if I want to try and get back in at 4132, how much would that cost? Oh, it was way down there, huh? Okay. So about 25. Finally, it got to below 55. So if 25 was just below, what about 26? Supply formed here. Just realized that. VIX coming back up, obviously. I often forget how long these meetings last, but I think it's like a half hour, 45 minutes. Usually the first 30 to 45 minutes is when the volatility, the randomness sort of ends, and we get a better idea of what's going to happen. But this is what I meant earlier about getting in before FOMC. So if we had gotten in at 55, 56, whatever, you saw how it just spiked up to the upper 100. So if I got in 55, 56, whatever, and put my sell at around 100, which was a little bit above Adam Mancini's target of 4165. I think it did hit 4165. No, it hit 4164. It almost made it, but if we put the sell at 4160, we could have sold at 90 or something like that and made a decent day's profit on that spike up. A lot of efforts being placed into keeping this from dropping below 4148. When it was coming down, I was debating about jumping in, even though I wanted to get in down here at 20 something. Okay, I took care of that. I should have got in at 40 something. Dude, I cannot stand Outlook, man. Oh, that's because these are new. Okay, I gotta do that later. All right. What a volatile 15-minute candle, though. From 411 to a high 413 on ES, from 4140 to 4165. Yeah, if I'd gotten in here, this dip at 45 or something, I set the sell at 65 or even 70. If, whatever. All right, I should take this off and see what happens when the dust settles. I wonder if the announcement's already been made of what's happening. Let's see if I can All right, I'm gonna be right back. I'm gonna clear this browser and see if I can pull up the results. Okay, I'm confused. This doesn't make any sense to me. When I looked at the schedule, it says that the meeting starts at 1, and here I'm looking at this YouTube video. It's live. It says watch live May 3rd at 2:30 FOMC press conference, but it's supposed to start at 2 o'clock. So I get 3 different times here. The website says 1 o'clock, and I checked it. It's Eastern time. Adam Mancini said it's 2 o'clock, and I trust him more than anyone else. And you can clearly see the volatility started at 2 o'clock, but this thing says 2:30 is when the meeting begins. So I don't know. What's interesting though is despite all this volatility, the MK strategy is still working. It doesn't look very clean here, but on ES, it's a very clean defined somewhat clean defined supply that occurred right here. Of course, if you took this short at this retest, more than likely this would have stopped you out. But if you didn't use a stop and you really trusted the play, it came all the way down here and you could have sold here. So, um, yeah. So I am reading this. I should just read it out loud, I guess. The Federal Reserve raised the funds rate by 25 basis points to a range of 5% to 5.25% during its May meeting, marking the 10th increase and bringing borrowing costs to the highest level since September 2007. The decision came in line with the market expectations. The central bank also signaled that it may be done with a tightening cycle, but taking out from the statement sentence pointing to the need for additional policy firming. Still, policymakers added that in determining the extent to which additional policy firming may be appropriate, they will take into account the cumulative tightening of the monetary policies, the lags with which monetary policies affects economy, activity, and inflation, and economy and financial developments. Officials also noted that although the U.S. banking system is sound and resilient, news lately says to the contrary, but okay, tighter credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation to the extent of these effects remain uncertain. And the extent of these effects remain uncertain. Okay. Well, we had another strong dip as I was reading all that crap, and we got down to the low 40s again, and we're back up to the 60s. Yeah, I should have put a buy in. All this time I'm yakking away at 45 and letting this just run. Looks to me like a big fight to try and keep this above this level. I always find these things interesting, these little indicators. They're so unreliable too. Well, I say that, but look, red arrow, big sell. Green arrow, um, strong buy, but kind of late on the game there. Red arrow, big sell. I was just hoping that this would reach its way down here, that I could have gotten in probably in the low 30s, mid 30s. Yeah, this is going to push eventually. The fact that this guy arrow won't go away, this is going to push up, and it's going to go to about maybe, this, I don't know where it's going to go. Should have got in when it dipped back down to 40. Oh, I could have gotten in two options when it dipped below 45. And sell both right about now, or one at least. Make 30 bucks, lock that in, and hold on to the other one. The VIX is taking a strong turnaround now, going down. All that time I had the alert at 55. If I had simply just bought in at 56, this is going to be a long video. I'm sorry, but I want to play the whole thing out. Kumenasai. Ah, sumimasen. Oh, it's Adam Mancini. Muted reaction for ES so far, but good follow through. My core support today was 4130 with 4155, 4165 targets, and we rallied to 4130 to 4164.25 high so far. 416675 remain major resistance breakout trigger. Bulls will need to hold 4130 if we unwind. 4118 and 4105 would be below if we unwind, I guess. Yeah, so meaning if I had gotten in here for a couple options, um, sold one at, well, who knows? Who knows what's going to happen, if this is going to turn around or not. No, the irony is I keep hoping it'll come down, then it comes down, and I think no, I'm not gonna get in because it's going down. Then it goes up, and I think oh, I wish it'll come back down so I can get in. The dichotomy of idiocy that I display with trading. Yep, there it goes. It's off to the races now. Man, I'm just thinking I have these um soundproof headphones on, number one. Number two, these are supposed to be hurricane impact windows. And yet every day I hear someone across the street on obviously on the floor, damn near 16 floors below, using a pressure cleaner. Every day from morning till late afternoon, this person's pressure cleaning. And it trips me out that it's so I can hear it as if I'm in a house and the only thing keeping the noise out is just my window on the obviously on the first floor on the level of the street. Well, we finally hit 4160. A little bit of a pullback now, but I don't think this is gonna last. It seems as though the market is just waiting to make sure that there is no additional news that they weren't already aware of, and then it's gonna pop and rally. So yeah, I definitely should have gone in a couple options when we dipped down to here. Although I was gonna say I didn't see the significance of 4143, but obviously when you look to the left of the chart, you will always see something to match up, like here and here. If I could have entered in at 44, 45, it would be nice to have a sell at 85. Did we hit 85? Yeah, we did already. There it is now. So that would be 40 bucks off of one option and then hold on to the other one. Let's see if we get our breakout. I'm laughing at the fact that I thought we would come back down and test this area, and I had a buy in here. How wonderful would it have been if this had sold all the way down so I could get in at like 25, 30. Then it turns around and rallies up to where it did here at 90. Oh my god, dude. Alright, I guess I have no choice but to keep it like this. How vexing.
Good afternoon. Before discussing today's meeting, let me comment briefly on recent developments in the banking sector. Conditions in that sector have broadly improved since early March, and the U.S. banking system is sound and resilient. We will continue to monitor conditions in the sector. We're committed to learning the right lessons from this episode, and will work to prevent events like these from happening again. As a first step in that process, last week we released Vice Chair for Supervision Barr's review of the Federal Reserve's supervision and regulation of Silicon Valley Bank. The review's findings underscore the need to address our rules and supervisory practices to make for a stronger and more resilient banking system, and I'm confident that we will do so. From the perspective of monetary policy, our focus remains squarely on our dual mandate to promote maximum employment and stable prices for the American people. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
I'm sorry about this, man.
Today, the FOMC raised its policy interest rate by a 1/4 percentage point. Since early last year, we've raised interest rates by a total of 5 percentage points in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are also continuing to reduce our securities holdings. Looking ahead, we'll take a data-dependent approach in determining the extent to which additional policy firming may be appropriate. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. The pace of economic growth in the first quarter of this year continued to be modest at 1.1%, despite a pickup in consumer spending. Activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the first 3 months of the year, job gains averaged 345,000 jobs per month. The unemployment rate remained very low in March at 3.5%. Even so, there are some signs that supply and demand in the labor market are coming back into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. But overall, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in March, total PCE prices rose 4.2%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 5 to 5.25%. And we're continuing the process of significantly reducing our securities holdings. With today's action, we have raised interest rates by 5 percentage points in a little more than a year. We are seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In addition, the economy is likely to face further headwinds from tighter credit conditions. Credit conditions had already been tightening over the past year or so in response to our policy actions and a softer economic outlook. But the strains that emerged in the banking sector in early March appear to be resulting in even tighter credit conditions for households and businesses. In turn, these tighter credit conditions are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of these uncertain headwinds, along with monetary policy restraint we've put in place, our future policy actions will depend on how events unfold. In determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will make that determination meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation. And we are prepared to do more if greater monetary policy restraint is warranted. We remain committed to bringing inflation back down to our 2% goal and to keep our longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
Come on.
Thank you. I look forward to your questions.
Thanks, Gina.
Hi,
Hi, Gina Smilik, New York Times. Thanks for taking our questions. I wonder if you could tell us whether we should read the statement today as a suggestion that the committee is prepared to pause interest rate increases in June. And I also wonder if the Fed staff has in any way revised their forecast for a mild recession from the March minutes. And if so, what a recession like what they're envisioning would look and feel like when it comes to, for example, the unemployment rate.
So, taking your question, of course, today our decision was to raise the federal funds rate by 25 basis points. A decision on a pause was not made today. You will have noticed that in the statement from March, we had a sentence that said the committee anticipates that some additional policy firming may be appropriate. That sentence is not in the statement anymore. We took that out, and instead we're saying that in determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account certain factors. So that's a meaningful change that we're no longer saying that we anticipate. And so we'll be driven by incoming data, meeting by meeting, and we'll approach that question at the June meeting.
I'll take it. I should have gotten in at 25 and exited at 60.
So the staff's forecast is so. Let me start by saying that that's not my own most likely case, which is really that the economy will continue to grow at a modest rate this year. And I think that's so different people in the committee have different forecasts. That's my own assessment of the most likely path. Staff produces its own forecast, and it's independent of the forecasts of the participants, which include the governors and the Reserve Bank presidents, of course. And we think this is a healthy thing, that the staff is writing down what they really...
Yeah, I sold too early again. There's the pop. There's the pop. Damn it. This could have been a great... Oh my goodness. If I had just waited a little bit longer. It's $20 today, which is not bad, but if I had waited, it could have been $50. Hell, it's probably going to break out at any moment. Ah, man. But remember, I had my buy-in down here. Can you imagine if I stuck with my original plan? I'd stuck with my gut. Again, you guys saw it earlier in my videos. I put a buy-in here, and I was laughing at myself thinking how arrogant I must be to think that the price is going to push down to this level. That is exactly where it went to. When I should go back and look at my video. That's exactly where it went to. And I could have gotten in with actually three options at that level. Let myself get picked up here right at 4130. Is that 4130? About 4131. But get picked up right here, and Adam Mancini's level was 4132, remember? And then ride it up there. Couple options at 25.30, sell them at 80. $100 right there. Easily made in a matter of, I don't know, what is it, 6 minutes? But still, positive for the day, and not by a small amount, relatively speaking, for my account. We've gone from 80 to 108 almost. So, and hey, to do that on FOMC, as volatile as that is, I'm gonna pat myself on the back for that one. I know I'm nowhere near, on a scale of 1 to 10 of good traders, I'm like a 2. But if I had stuck with my original plan and put my buy in here, this would have been even better. Still, we're not, from a bull standpoint, we're not out of the woods. Oh wait, it's coming back down. Should I jump in again, or is it stupid? Stupid. Yeah, I should call it. I should definitely call it. $20 profit. I should just walk away. But what I was going to say is the bulls aren't out of the woods yet, because we're still stuck in this range of, what was it again? 4120 to 40175. That's the range. I mean, we were out of it a little bit ago, early this week, but we fell back into it. Big rise in the VIX. I wonder if I should continue listening to what Papa Powell's saying. Did I pause or did I turn
think
on the
they're not
volume?
especially influenced by what the governors think, and vice versa. The governors are not taking what the staff says and just writing that down. So it's actually good that the staff and individual participants can have different perspectives. So broadly, the forecast was for a mild recession, and by that I would characterize as one in which the rise in unemployment is smaller than has been typical in modern era recession.
He just tweeted. I shouldn't pause this. I should just turn the volume down. Sorry about that, guys. Kom in asai. Kom in asai. Es tut mir leid. Matane. Okay. Excellent follow through, and my 4166 4175 target for today hit in ES precisely. Did it? Yep. Good Lord, man, he is a prophet. Absolute, just. I wish I could do a Vulcan mind meld with him and just get his experience. But from a futures perspective, if you had gone long at 4130, which is where we hit earlier today, or if you went long yesterday at the reclaim of 4130, you would have made decent profits from a futures standpoint. Let me finish reading it. 4130 was key support, and we tapped it at a second time today, ran to target, and rejected. Major resistance there with breakout targeting 4186, 4205. Same drill. 4130 must keep holding or we'll sell below. And look, guys, it looks like it would have been right for me. It would have been smart for me or a good risk for me to jump back in again. We went down to about 35 and it's pushing back up again. So I could have added to my position or re-entered here at 35. And although we have formed a supply right here and we can't seem to close a candle above 4155, even though we ran up to 4168 or 4166 Adamantini's target, it seems to be strong resistance after all. But if we can stay above 4130, we may run up there. You know what? Hold on. I need to figure out auto zoom. 41. What was his ultimate target again? 4186 and then 4205. Where's 4186 on SPY? Well, 4166. I hope these levels are right, guys, but 4186 is right about here. Okay, so that's 415 strike. That's what I'm using right now. I'm on the 415 strike. Damn it. I'm asking myself this because I'm thinking about a swing, but it's probably risky. No doubt tomorrow. Let's look at the options tomorrow. Let's see what 416 would be. Oh man, it's a bit pricey. Yeah, it's too risky, man. You know, I wish I had a community of traders that I can trade with and we can sort of brainstorm. I could ask guys, what do you think? Do you think we should try swing? A 415 swing till tomorrow. But a 415 is 90 is $100 to swing 415 till tomorrow. The next possible level is 4205. Let's see where that is. That's 418 strike. And the top of the megaphone, by the way, guys. That's the top of the megaphone. Although I really think my megaphone should be lowered, to be honest. I think the megaphone should be adjusted to the top here. I don't know if Adam and Cindy did that in his newsletter. I checked it, looked at it, but don't quite remember. I think I was looking at it on my phone when I was waiting for my client. Um, so okay, let's try the 417 tomorrow. That's $50. It actually dipped down to $40 a moment ago. Do you think it's possible that we may push back down one more time within the next half hour and retest 4132 for a final push above? But then, and this is the part about myself with trading that I can't stand. I create a plan. My gut tells me this is what the plan is, but then there's always that voice that says, okay, but here's the problem with that plan. And that voice is now saying, if we retest 4132 again, that would be like the third or fourth test today. And each test, the level weakens. Here we just had a bounce right at VWAP. Well, for this candle, at least. No, my gut's telling me that what I should have done was held that position I had earlier and sell at 80. I was in at, what was it I got? I was in at 35. I was in at 35 and I sold at 55. I absolutely should have sold at 85. That would have been a $50 profit for the day. Yada yada. That green arrow was there pushing and working and trying. It just disappeared. It's like it crushed that green arrow. Maybe it will test 132 again. Let's wait. I'm going to wait and see if it comes closer to 132. I'm going to try and look and see what kind of response we get. And I'll try again. I have the funds to try it again, but I'll put a tight stop loss, which is risky with this volatility, but at least it would mitigate the losses. But I need to see a quick recovery. I need to see the level test, then I need to watch the recovery of that level. Then I have to quickly enter and then quickly put in the stop loss and hope that it doesn't come back down again for another retest. But it looks like all of my talk is for naught. It's recovering again. Let me show VIX so you get an idea what's going on with the VIX. 2 o'clock, you can see that volatility. There's our rally, there's our pushback, and here we are right now, sort of centering around this daily right here. If the bulls can close this candle below this daily, that'll look good. What I was hoping for, though, I was looking at my other screen, was a retest of this level or perhaps the 1 hour. But I don't know if that's really going to be a strong rejection for VIX. But look, guys, check it out. It's being pushed back down. We're going to be testing 4132 again. Will it bounce? Will the bulls be able to recover again? Or is this going to be the point where we fail? And this is the trick. This is where I have to decide when to get in. We'll try at 35 and see if it pushes back down a little bit to pick us up. Nope, it's leaving us. We didn't get picked up. Now it's at 38, 40. And see, that's part of the trick. Is it recovering? When do you get in? And yep, yeah, I had my chance. So if I had gotten in there, if I had gotten in at 35, if I had timed it better and gotten in, I would already be up another $10 for the day. And look at it, it's turning around completely. So we dipped down to 32, and here we are now back at 50. So the Bulls did defend 134, 132 again. I should have just, you know what? This is the stupidity of me. I should have just put a buy in there, right around 4132. My worry though is that when it comes down and picks me up, it keeps dropping. So it'll be like, jumping into a river, out of control river, just taking you downstream. What I prefer is like a wave rushing onto the sand and picking you up and then taking you out to sea. I wonder if Papa Powell's still speaking. Yep.
To which additional policy firming may be appropriate is going to be an ongoing one, meeting by meeting, and we're going to be looking at the factors that I mentioned that they're listed in the statement, the obvious factors. That's the way we're going to be thinking about it. That's really all we can do. As I say, it does complicate. We have, a broad understanding of monetary policy. Credit tightening is a different thing. There's a lot of literature on that, but translating it into rate hikes is uncertain. Let's say it adds even further uncertainty. Nonetheless, we'll be able to see what's happening with credit conditions, what's happening with lending. There's a lot of data on that, and we'll factor that into our decision making.
Howard Schneider with Reuters. Thank you. So noting that the statement dropped the reference to sufficiently restrictive, I was wondering, given your baseline outlook, whether you feel this current rate of 5 to 5.25% is in fact sufficiently restrictive.
So that's going to be an ongoing assessment. We're going to need data to accumulate on that. Not an assessment that we've made. That would mean we think we've reached that point, and I just think it's not possible to say that with confidence now. But nonetheless,
Oops.
You will know that the summary of economic projections from the March meeting showed that at that point in time that the median participant thought that this was the appropriate level of the ultimate high level of rates.
It seems to me that a lot of the questions being sent to him, I mean, I haven't heard all of them, obviously, I've been busy trading. It seems like everyone's trying to get a handle on figuring out whether or not there's going to be a pause, whether this is going to be the final base point raise. And it seems that he's not giving a definitive yes or no. Rather, he's simply saying this is going to be a case by case, we got to check out the rates and see. Look at that pop. Yeah, guys, I definitely should have got back in here when it got into the low 30s. I could have just made another $20. $20. Forget that might be higher. We came back down and retested 132 again, and I should have just jumped in. But was that voice of caution a rational voice of caution? We've been testing this multiple times. If we test it again, it may well fail. And this was probably the closest test we've got to 130 again since this one, or whatever. The last one was a test. But that would have been a good entry. 31, 32, 35. What did I put my buy in at? Did I try to get in at 35? Yeah, I should have tried to get in 36. I probably would have gotten filled at 36. Then I could have sold here at 56 and made another $20 for the day. I am curious how this thing keeps
The reason is that we, again, with our monetary policy, we're trying to reach and then stay at for an extended period a level of policy stance that's sufficiently restrictive to bring inflation down to 2% over time, and that's what we're trying to do with our tool. I think slowing down was the right move. I think it's enabled us to see more data, and it will continue to do so. So I
just realized that
we really we have to balance. We always have to balance the risk of not doing enough and not getting inflation under control against the risk of maybe slowing down economic activity too much. And we thought that this rate hike, along with the meaningful change in our policy statement, was the right way to balance that.
And just to follow up, what you said in response to Howard's question, you'll need data to accumulate to determine if this is a sufficiently restrictive stance. Does that data need to accumulate, or could it accumulate over a longer period than a 6-week intermeeting cycle?
As I mentioned, I would just say that this assessment will be an ongoing one.
Guys, it's going to be an
you
ongoing
can't
assessment.
with
Stop asking
economic
questions.
data. You can't. You've seen take inflation for it. Look back. We've seen inflation come down,
So that's
move
what I
back
wanted to
up
do. I wanted to
2 or
get
3
in at
times
30.
since March of
That was the
2021.
plan.
We've seen inflation have a few months of coming down and then come right back up. So I think you're going to want
Get in
to
and then
see
see about a swing
that
or sell it today.
that a few months of data will persuade you that you've got this right, kind of thing. And we have the luxury. We've raised 500 basis points. I think that policy is tight. I think real rates are probably, you can calculate them many different ways, but one way is to look at the nominal rate and then subtract a reasonable estimate of let's say 1-year inflation, which might be 3%. So you've got 2% real rates. That's meaningfully above what many people anyway, would assess as the neutral rate. So policy is tight, and you see that in interest sensitive activities, and you also begin to see it more and more in other activities. And if you put the credit tightening on top of that and the QT that's ongoing, I think you feel like we may not be far off, or possibly even at that level.
Great, thank you, Edward.
Thank you very much, Chair Powell. Edward Lawrence with Fox Business. So if the Federal Reserve gets down to the 3% inflation, as the projections show at the end of this year, or close to it, would it be okay for you for a prolonged period of 3% inflation and hoping for some outside event to move down to 2% target?
I think we're always going to have 2% as our target. We're always going to be focusing on getting there.
Would you be okay with a prolonged 3%?
It's let me just say that's not what we're looking for. We're looking for inflation going down to 2% over time. I mean, that's not a question that's in front of us, and it would depend on so many other things. But ultimately, we're not looking to get to 3% and then drop our tools. We have a goal of getting to 2%. We think it's going to take some time. We don't think it'll be a smooth process, and I think we're going to need to stay at this for a while.
How does the other side of the mandate, the jobs side, once you get to 3%, going from 3 to 2, how does the other side of the mandate balance?
I think they will both matter equally at that point. Right now, you have a labor market that's still extraordinarily tight. You've still got 1.6 job openings, even with the lower job openings number, for every unemployed person. We do see some evidence of softening in labor market conditions, but overall, you're near a 50-year low in unemployment. Wages, you all will have seen the wage number from late last week, and it's whenever it was, and it's a couple percentage points above what would be consistent with 2% inflation over time. So we do see some softening. We see new labor supply coming in. These are very positive developments, but the labor market is very, very strong. Whereas inflation is running high, well above our goal, and right now we need to be focusing on bringing inflation down. Fortunately, we've been able to do that so far without unemployment going up.
Matt.
Hi, Chair Powell. Matthew Boesler with Bloomberg News. So many analysts noted at the time of the March FOMC meeting that at least half of Fed officials' projections did imply or seem to imply that a recession was in their baseline forecast as well, given the strong first quarter GDP tracking estimates. And so I'm just wondering if you could kind of elaborate on, why you're optimistic that a recession can be avoided, given that that's the Fed staff's forecast, possibly also the broader committee's forecast as well, and also, of course, most private sector forecasters.
Yeah, I don't think, I know what's printed in the Summary of Economic Projections and all that. I don't think you can deduce exactly what you said about what participants think, because you don't know what they were thinking for first quarter GDP at that point. They could have been thinking about a fairly low number. Anyway, in any case, I'll just say I continue to think that it's possible that this time is really different. And the reason is there's just so much excess demand really in the labor market. It's interesting, as you know, we've raised rates by 5 percentage points in 14 months, and the unemployment rate is 3.5%, pretty much where it was, even lower than where it was when we started. So job openings are still very, very high. We see by surveys and much evidence that conditions are cooling gradually, but it really is different. You know, it wasn't supposed to be possible for job openings to decline by as much as they've declined without unemployment going up. Well, that's what we've seen. So there are no promises in this, but it just seems that to me that it's possible that we can continue to have a cooling in the labor market without having the big increases in unemployment that have gone with many, prior episodes. Now, that would be against history. I fully appreciate that. That would be against the pattern. But I do think that the situation in the labor market with so much excess demand, yet wages have been moving down. Wage increases have been moving down, and that's a good sign, down to more sustainable levels. So I think it's still possible. I think. The case of avoiding a recession is, in my view, more likely than that of having a recession. But it's not that the case of having a recession is. I don't rule that out either. It's possible that we will have what I hope would be a mild recession.
The committee also noted in March that wage growth was still well above levels that would be consistent with 2% inflation. Do you see that as well? And could you kind of explain, how you come to that judgment?
Sure. So we look at a range of wage measures, and then that's a nominal. And then so you assume wages should be equal to productivity increases plus inflation. And so you can look at the Employment Compensation Index, average hourly earnings, the Atlanta Wage Tracker, compensation per hour, basically those four, and many others, and you can look at what they would have to run at over a long period of time for that to be consistent with 2% inflation. They can deviate. Corporate margins can go up and down, and there is a feature of long expansions where they do go down, where labor gets a bigger share toward later in a recession. Later in expansion. So yeah, and we calculate those, and you have to take the precision with a degree of salt.
I know,
but
I
would say that what they will show is that if wages are running at 5%, 3% is closer to where they need to be. Wage increases closer to 3%, roughly, is what it would take to be consistent with inflation over a longer period of time.
Hold on, let me just double check.
By the way, I do not think that wages are the principal driver of inflation. You're asking me a very specific question. I think there are many things. I think wages and prices tend to move together, and it's very hard to say what's causing what. But I've never said that that wages are really the principal driver, because I don't think that's really right.
Great. Chris Rugaber at Associated Press. Well, you mentioned profit margins. Those have expanded, did expand sharply during this inflationary period. And while there are some signs that they are starting to decline, many economists note they haven't fallen as much as might be expected, given that we're seeing at least some pullback among.
I will return and let you know what happened for the rest of the day, probably in another half hour, 45 minutes before the market closes. Maybe I should have held on to this for the swing, but I think it was just good enough just to make another $15 profit or whatever it is I had gotten. Kind of wish I had gotten in at 30 and then exited here, but this is kind of, it's, wow, this is a big volume push here. Anyways, I'll be back later. All right, another update before I walk away. It looks like it was a very good thing I sold here when I did up to this point, because this completely turned around after I sold, and we lost support of 4132 at this point, and it just fell. And look, oh, this is interesting. Hold on. I know it's going to be a bunch of levels, and I'm so sorry, but megaphone. Wait. No, not the megaphone. What line is this? Why do I still have this here? Well, whatever this line is this the megaphone? No. This was my original channel here. The megaphone is down here, because this is the bottom of the megaphone. So this was a channel that we're stuck in for a while, but we bounced here yesterday, and this is now, we're back to yesterday's low. Anyways, so yeah, whatever, we're selling off. It's pretty much what the summation of this little update. We are, let's go back to a 515. We are back at this, wait, this is the channel. Yes, here's the channel. Yeah, I knew this was going to be a complicated area. We're going to be trapped between these areas, between this trend here, the large one that we rejected from a couple days ago and then broke out of yesterday in that big sell-off. So it looks like this trend is, I don't know, we may end up breaking out of it after all. I mean, this is the bearish month. I don't know if we're quite in that spot yet, but this I thought might help add a support, and then we have the daily running right down the middle. So, and then I guess we'll just look at ES just for the fun of it. The megaphone's way down here, and so we're dead center of the megaphone right now. But this big sell-off here, after we lost 4132, I'm gonna guess Adam Mancini probably went short after the loss of 4132, maybe here around 4128 at this little sell-off here. But this is what I was saying earlier about the strangle on a bigger picture. You could have sold and taken your profits for the longs, any longs you took, and your put would have paid off by now. Let's look at what was the put that we were talking about before? Was it the 410? Yeah. So remember I said how you want to put a buy-in at the level where you think it might go up to, where strong resistance is, and once it gets up there, you sell your long and you immediately buy your put. So if you could have gotten in here at 80, 90, any of these tests, if we go down to, I think we've already, this is the support Adam Mancini gave, wasn't it? 4105. Yeah, I don't know. I suppose if you were going short, you would take most of your profits by now and leave a couple of runners overnight, see if this gets down even lower. But yeah, I'm sorry guys, that's my update. I'm not really focused right now. I'm running low on sleep, and I still have to drag my butt out and work out today because this is the day I should do it. There's something I'm supposed to be mentioning that I'm forgetting, but I want to finish this up and submit this on time. And a positive day, although I took some risks and I didn't follow my MK strategy. I just stayed with the level to Adam Mancini gave me and tried to follow my gut. So yeah, anyways, I hope everyone else had better luck today, or at least as good luck. Anyways, Guten Morgen is good morgen. What's I should do my language before I go. What's good afternoon in German again? Guten Tag? Guten Abend. Yeah, guten Abend.